let's figure out how to make money on lows. So the first thing that I noticed, and I just pulled this chart up right before we clicked play on this video. There has been a lot of resistance on lows that I have not even noticed. So it went to all-time highs at the end of last year, beginning of this year. And what has happened since then? This purple line is a 25-day moving average. It has not been able to get over that 25-day moving average the entire first half of this year. It tried to break it here, fell back down. Tried to break it here late in mid-March, fell back down. Tried to do it again maybe 2 weeks ago, fell back down. And finally today, it's really broken away from the 25-day moving average. So this tells me that we're going to have a lot of downward pressure on lows. The reason that we're seeing this is same-store sales are starting to slow. And if you've watched my morning show at all, what I say is you need to pay attention to Lowe's. You need to pay attention to Home Depot. These are stocks that are going to give you a little foreshadowing of where the economy is going, because it's more of a do-it-yourself luxury item. Yes, you have refrigerators and washing machines that you need, but home projects, they might be slowing because people don't have as much money. But let's see where it's going. So right now, we are just sitting, if you notice, right back in here, we are at the exact same price. We have fallen to the exact same price, $182, and that is a strong support level. As soon as it breaks 182, probably gets into the 180, 179 level, you are going to have a lot of downward pressure on this thing. And there is not a whole lot of support in there except for about 160, and then you're coming back down to 140, and then you're going to COVID levels of 80. This can happen. And the idea on the long-term chart is to see if we can get a good engulfing candlestick. Let's see if we have an engulfing candlestick today. We do not. We have a lot of wicks today because people are bouncing all over with the price and what they want to do with the stock. As soon as we get a real engulfing candlestick, something like this, completely filled, we will be able to trust the trend and let the trend just go sideways on the bottom for hopefully multiple months as this stock price just keeps falling and falling and falling. Now, with that being said, something that I really want to point out right now, what do we notice right here? That is the earnings signal that tells you what happened on earnings on TradingView. Click on it, and it says they beat on earnings per share, and they missed on revenue by less than 0.5%. This is why you don't trade earnings. This stock right now is down 6%. Had you thought that this was going to be a positive earnings reaction, well, it's not. And you would have been down 6% if you were trying to go long on this. So this is why I do not trade earnings. And that is how you trade lows. Catch you on the flippity flop.